It's a great pleasure to be here. Thank you very much for having me. Today, hopefully to give you an interesting session, and my panelists will join me in a minute. InsurTech has a huge amount of capital and interest moving towards it right now all over the world. And as you can see just from the size of this particular conference, we can see a lot of interest and in trying to figure out an industry that I think for centuries has, proven itself to be quite complicated. So my session, just a few minutes on the introduction, is to talk through a little bit about what Aviva's done, and maybe a little bit of context. Aviva is a 322-year-old UK-based insurance group. We do operate in many different countries, but in the UK, that's where we started in 1696, and we're just a couple of years younger than the Bank of England. And we have about $500 billion of assets under administration. And a few years ago, we embarked on a digital journey. And I have to say, we found the landscape really, really complicated. And it took us a little while to sort of make sense of the world of InsurTech. And I would say we are far from really understanding it, but we're a little bit moving in hopefully the right direction. Now, how do you define success? And would anybody think or come up with an example of a truly successful, scaled, and profitable digital insurer? Or for that matter, a really, really successful InsurTech? And I have to say, there's a long list in front of you, but I personally had a little bit of trouble coming up with a few names, or even one, that could really, truly be without doubt, a global leader. And there's many reasons for that. I think insurance is highly regulated, insurance is complicated, and by the way, insurance has a lot of facets to it. There's property and casualty insurance, which tends to be maybe a little bit simpler if you're dealing with personal lines. And it gets increasingly complicated, certainly for the customer, as you get into long-term protection products or savings products or pensions and so on. And I think a lot of people are trying to solve this challenge, which is how do you make a product which a lot of us in the industry historically believed it's got to be sold, as opposed to customers wanting to buy them. And certainly Aviva tried to tackle that issue. Now, as we were thinking about it, we wanted to break down this complicated problem into some quite simple sort of componentry. And we organized ourselves into this format. And this is, by the way, probably our third iteration in terms of organizational structure. But we now have capabilities across 4 verticals. And the 4 verticals work absolutely in concert with one another, otherwise it doesn't actually work. So as a start, we realized if you want to do digital insurance, you need to have digital trading capability. And this is very different to the traditional distribution pillars that insurance companies utilize, primarily face-to-face. So if you look at Asia, it is dominated by agency, bank insurance, a little bit of IFA/broker, and that is a hard one to overcome. And that also is the basis upon which I think our industry believes that digital is going to be a hard road. But what we realized, and certainly originating more in the UK, and we recently launched a brand new insurance venture with Tencent and Hill House in Hong Kong, is there might be a different paradigm to thinking about it. And I will go into that a little bit next. Quantum is our data analytics capability. We've now got about 700 data scientists globally. And actually, we realize that data is the secret sauce. There is a lot of complexity in what we do, and it's easy to come out with a very complicated insurance policy. Unfortunately, customers don't actually understand what it says. As a result, they feel they need an advisor. So complicated is actually easy. Simple is very difficult. And how can we actually help deliver a really simple journey for our customers? It is actually grounded in data. Factory is our realization that if we don't build once for multi-market deployment, then economically the model doesn't make sense. So now this is really difficult, especially for a group like Aviva that was formed through the aggregation of many, many M&As over the years. So we have many different legacy systems, and we don't have one common infrastructure, and you're building once, then actually we can't compete with the startups. And even though startups have to pay more for customer acquisition, I would say to run a legacy backend is still more expensive than a brand new venture. And then lastly, our ventures capability is actually how it all comes together, is how we work with startups, how we leverage the innovation outside of our industry or the innovation within the insurance sector to try and modernize how we do things. Because ultimately, Aviva is not built to come up with all new ideas. We are built to run an existing enterprise, but we want to move towards a much more efficient model. So I'm going to go a little bit more into quantum because, as I said, I think what grounds our capability is in actually data. And Aviva has over 300 years of underwriting capability. And for all that time, we probably believed that we can do a better job than our competition, analyzing risk, leveraging data, and delivering protection for our customers. That has shifted dramatically. And if I use a simple example, that in one of our European markets, we did do a proof of concept with a leading digital retailer on a personal lines product. And we realized that the additional behavioral insight we get from sharper behavioral on this particular digital portal gave us an extra 13 points of pricing differentiation. Now, the good news is that digital retailer today doesn't know how to do insurance. But in a few years, they could very well figure it out. On the flip side, if we don't partner with digital partners, again, an example of us working with Tencent in a joint venture format in Hong Kong is because we want to learn and have access to different sources of information. Because the insurance industry is, by its definition, very episodic. We don't have constant engagement with our customers, and therefore we actually have only at best a moment in time analysis of our customers' needs. Whereas if you're working with a digital partner that has frequent daily engagement, whether it's a payment app, whether it's Amazon, or whether it is recently, just look at the shopper behavior on 1111 for Alibaba, there's a huge amount of insight you can get from what people do through the digital journey. So we built a digital analytics capability. First is just by decoding uncertainty, we're using new data analytics capabilities to simplify how we manage reams of data. And this is not any more traditional actuarial capability. We've got sort of PhD level data scientists helping us organize and decipher data. Wow the customer and deliver growth is if you don't have very, very specific projects to focus that capability upon, then you end up wasting a lot of time and effort as well. So a few examples on what we've actually done. And in terms of tackling our big problems and hopefully delivering simplicity for the customer. So first off, if you ask customers a lot of information, if you give them a digital form to fill out with 100 questions, guess what? They will bounce. And that was our experience. And what's interesting is even when you simplify 100 questions down to 10, if the customer needs to get off their chair, go find a piece of paper in their study, they will bounce. So the whole point is to eliminate questions that customers can't answer off the top of their head. So for example, instead of doing a health questionnaire, we are now in the UK able to access public health information with the customer's consent. We take those medical reports, we put them through a natural language processing engine, and what used to be a 6-week underwriting journey is now 3 seconds. So that is an example of, and by the way, we didn't build that NLP because that wouldn't be smart. We partnered with IBM Watson for that. But we built all the rules because we have all the data behind the rules, and what we end up doing is simplifying that journey dramatically for customers. Aviva Plus and Aviva Drive are examples of how we use everyday customer behavioral data. So Drive is an app you can install on your phone, and at the basic level when we first launched it is to track customer driver behavior, and we can give you a discount if you're a safe driver. Now that was our first foray into leveraging customer data through a mobile device. And what we've now moved towards is, again, working with InsurTech, is we added a dash cam so that your Aviva Drive app actually becomes a dash cam on your dashboard just with a simple cradle. And if you get into an accident, because we worked with another InsurTech that tracks collision, we will save the video of 1 minute at the point of your collision. And if you want to, in the future, hopefully a one-touch claim submission, because that video plus the OEM sensor information on the cars, once it becomes available, there's a lot of startups working on that, and think about the customer journey at that point. You get into an accident, we know if you need an ambulance, we know if you need a rental car or a pickup to go to the destination, we know whether to call the police, and most importantly, the fundamental trust problem that customers have, which is insurance companies don't believe them, that trust has been addressed because we have all the information and it's a one-click claim submission. And hopefully we get to that point in the not too distant future. So all of this is leveraging data. It is organizing information that is available in the ecosystem. But if we didn't have a really, really focused view as to what we want to deliver to customers in terms of a proposition, then insurance companies could spend a huge amount of money doing a whole bunch of different things and actually end up doing nothing. So I think if there's one message to take away, this ecosystem is rich. We are learning how to leverage it, but without the right capability, without the right focus and prioritization, then insurance companies still won't be successful in terms of evolving their future model. So that was just a very quick introduction. I think now we're going to invite the rest of my panelists, and we'll have a proper conversation.
Good afternoon, everybody. Delighted to have you here. My name is Murli Buluswar. I'm a senior advisor to the Boston Consulting Group. With me here, I have an esteemed set of panelists. I will ask them to introduce themselves as we go through the Q&A sessions one at a time, if I may. To kick things off, maybe Benoit and Walter, specifically to you, is as we think about the space of InsurTech, the investments that are happening here are growing by leaps and bounds. We don't really have any unicorns to speak of, perhaps one or two. Do you think we're just overhyping the near-term impact of this? Where do you see the gap and where do you see the potential?
Well, let me take that first. I was very interested to see your slides, Chris, to show that nice new, and all the fintechs and all the pretty pictures of all the logos. I didn't see Singapore Life up there yet, but I can say that as the newest life insurance company, having been able to attract all the possible capital that we could possibly need to build a new life insurance company, being the fastest growing life insurance company in Singapore, and now a market leader almost in terms of direct-to-customer transactions online and digitally, we fully intend to be that unicorn that you're speaking of, Murli. We see massive amounts of investments in this industry. Us as large life insurance companies, private equity firms, the incumbents, are all looking to spend and grow our ecosystems. And there is so much cool technology out there for us to leverage on and build. But you're right, there are very few and far between unicorns. Singapore Life is going to be one of them.
So how do we do it? We do a sales pitch, one each over?
Chris has had a good sales pitch so far, so we can all sales pitch a little bit.
That was shameless, Walter.
Okay. So first of all, I think you're right. I think that what we have seen on the fintech trend started later with the InsurTech, but I would say it's catching up a lot. Maybe one of the reasons why it has not had the same impact or the same success of fintech for the moment could be, one, that the innovation has happened on some elements of the value chain and not all of it. So you have seen over the years lots of initiative on the distribution side, for instance, on the pricing, but not on the full chain. And I would say that's one. Two, I would say, and this is what we were discussing on backstage, I think the incumbent have not been doing nothing. I mean, as we just saw with Chris right now, the incumbents are also progressing gradually. So these two together combined show that it's not because you have a perfect data solution or the newest technology available that it's enough to disrupt the business. And I would say maybe over the centuries, the insurance industry has been either quite good or quite bad, depending how you look at it, to be totally integrated. Therefore, it's not because you are better or smarter at one point of the value chain that it's enough to disrupt. The day you would have either an incumbent or a new entrant capable of bringing up a totally new value chain, then it would be a different story.
Thank you. Thank you. Maybe picking up on that, we hear about the word disruption quite often. And I scratch my head thinking, to what extent are the investments in the venture capital space, to what extent is InsurTech, as we think about it today, designed to disrupt the existing ecosystem? Or to what extent is it really designed to enable the existing ecosystem and the incumbents to be more intelligent, deliver better customer experience, and expand the safety net of the product that we call insurance? Maybe Chris and Wilf, if I could...
Okay, thanks. Good afternoon. Well, our view in Prudential is that a lot of the InsurTech, FinTech, Health Tech, MedTech, it's not really here to disrupt the system, but rather to contribute to it. And I think there's been some kind of change in thoughts around that over recent years. There were ideas in the beginning maybe that the big FinTech companies would take away our business altogether. Of course, our business is very, very capital intensive, as you know, given all the reserves that we need to hold. So what we're finding is many of the new players, the FinTech companies, the InsurTechs, they're not trying to replace the entire value chain, but they're able, in a specialized way, to contribute to and add to parts of the value chain. And so there's some tremendous partnerships that we're finding, and we very much welcome this partnership. For example, through the Proof Integrate program we've been running for a couple of years here in Singapore, we're able to connect with and get to know many of the fintechs, and they're really able, because of their specialization, to do something that we're not able to do, and as Chris was saying earlier, that we wouldn't want to do ourselves because we're not a tech company.
Maybe just a few comments from me. That the way Aviva thinks about innovation is sort of 3 levels, and what we've sort of figured out is for us to be viewed as innovative, we have to tackle all 3. So the first level of innovation is your product innovation, and because it doesn't matter what you do if your product's not materially differentiated, it's actually very hard for customers to understand why should I buy Aviva. So that's first level, and there's a lot of propositional bits that you could partner with to sort of enhance that product proposition. The second level is the experiential, and we've spent a huge amount of time trying to simplify the customer journey to acquire and self-service. And again, there's a huge amount that you can do with InsurTech partners to kind of move that forward, whether it is simple payments or AML CSFT or whatever it is. Even something as simple as identity validation, in Hong Kong, if I use an example, using Tencent's built-in sort of video validation module helps that experience get dramatically better. And then the last bit is marketing innovation. And this is probably where I think generally for the industry we do least well. If I compare ourselves to some of the more exciting consumer sort of fast-moving goods type industries. And the insurance industry hasn't done a fantastic job marketing itself as a really value-added proposition for customers. So I think actually, we need to hammer all 3. And the last bit, if you're still marketing yourself with expensive traditional media that tends to be one way outbound, then you're not going to get really effective engagement. So modern digital marketing is actually 2-way. It is social, and only then does it get sort of really engaging. But for an insurance company to get nimble enough to be willing to have an active live conversation with its customers is quite a significant journey in itself. But hopefully that gives a bit of a sense as to kind of the challenge ahead of us.
Just on that disruption, Wilf said, Prudential is not a tech company, but looking to partner up with techs. You're saying you're looking to, expand your ecosystem to be more fintechy. Singapore Life started as a technology company. We were technology first. We've built fantastic platforms from the ground up to engage with customers in a digital way. We have never seen ourselves as a disruptor. Disruption is a bit of an overplayed word. I think we are attempting to help the industry to transform, to take a leading role in being able to provide services to customers that are intuitive, that are direct, that are easy to engage with, to build on customer experiences which add value to those customers rather than to try and disrupt. If we look at the penetration of insurance and financial services in Singapore and the whole of Southeast Asia for that matter, there is plenty of opportunity still ahead of us. There is more than enough opportunity for us as competitive insurers to share in the growing wealth needs of our customers. and our job is to use this core technology platforms which are growing from strength to strength to improve the experience of our customers. So it's less around disruption and more around providing a service to customers which is transformative and meets their particular digital needs.
Very helpful, thank you. I do want to pick up on that point, Walter and Wilf, what you said as well around how there is almost a barrier because of the capital requirements in the insurance sector for carriers to potentially inhibit new competitors, or that's how I inferred what you said. Maybe the question then is, perhaps it won't upend the current ecosystem, but maybe the actual value chain and the distribution of the value might look different 10 years from now than it does today. And perhaps that's in part also because the InsurTech ecosystem might actually create more value by bringing more customer intelligence, better risk analytics, and so on and so forth. So I'd love your perspective on whether you think the fundamental value chain might be disrupted or reinvented or reshaped, even if the carriers aren't necessarily upended.
Okay, Murli, Walter, I go first. Well, things are changing. I mean, here in Singapore, and it's consistent across the rest of the region, people are living much, much longer. I think specifically Singapore, we've got the background to this is we do have the third highest life expectancy in the world, 83 years. People living longer and longer, expecting 100-year life for many people. But the reality today, which is relevant to us, is so many people are spending so many years, on average 8 years, in ill health. So I think the fundamental shift that's happening in our industry is that there's so much we can do to transform what we do, to move away from simply paying claims when people are sick, but to help to protect them, but also to get involved in prevention. And that's where we're working with many of the medical tech and health tech companies, whether it's trackable devices or whether it's companies that help with early diagnosis of illnesses to treatments. And this is an area where there's so much we're able to do with technology partners that moves our business away from, say, simply paying claims to helping people to prevent getting sick in the first place, and then to get them treated early through early detection as well. How does that change the value chain? Well, I think in particular, what we are seeing is that with so much technology and now consumers are so much more sophisticated, much more financially aware than they were previously, and along with everything else, they're looking online, they're shopping online, and unlike other industries, what we're still finding is that, back to your question about is the nature of the industry changing, well, we're still finding that people generally want some kind of advice from someone they know and they trust. It's not like buying a movie ticket online. Typically the purchases are very big, saving for school fees, saving for retirement. So what we're seeing is that the role of the consultants, we have 5,000 in Singapore, will still be very, very important part of the value chain, very important part of the business. But through deploying the technology, we're able to enable people to work much, much smarter, to use the iPads and the apps in the financial consulting process, to do business illustrations very quickly, to have all the business submitted electronically. So digital's helping to take away a lot of the inefficiency and to ensure that consultants are able to really focus on the high value adding advice to their customers. But we don't see a fundamental shift away from people towards technology, if that's where your question was heading.
Thank you. Thank you.
I disagree. I think there is definitely a shift towards technology. I think very simply, every one of us, everybody in this room has got a financial need. Everybody has got someone that they love. Everybody's got a family. Everybody's got to make sure that that family is protected. Everybody's got to have a savings plan. Everybody's got to put some money away for some time in the future. What we're seeing now on this, how do we as insurance companies present ourselves to customers and how do people trust new enterprises? We're seeing a significant change in the way people trust firms, and that trust is translating into a different way for which people to engage. In the old days, it would always be around traditional advice and in a limited information environment. But where we're seeing trust evolving now is that the people that people trust most, the first thing is that you trust your family. The second thing you do is you trust your friends and your social networks. Then you trust Google. Yeah. Then you trust bloggers and people that write stuff about stuff. Then you trust financial advisors. Then you trust brands. So in that order, right? So people are no longer putting the same faith in brands and brand-based advice than they used to because they just don't trust it. What we're seeing now is that technology is creating a brand new culture of trust. There's a new whole economy that's emerging around how we are all confident in buying digitally. We buy 90% of what we buy today. You buy your Redmart online, you buy watches, shoes, you buy everything online because you trust you're going to put some money in and you're going to get the goods and services that comes from that. We are going to see more and more technology-based trust fulfillment through digital advice, through digital engagement, and so in terms of the question on how do we see the evolution of our industry in distributing products and services to our customers in the future, we certainly see as Singapore Life a distinct shift towards self-engagement, social advice, social interaction, and fulfillment of very, very simple products in a useful and easy to access way to our customers.
So maybe just to pick up on that, and Benoit, I might ask you to react to this as well, then can you conceive of a scenario where the aspects of our lives as customers, think about the firms that would have the most amount of knowledge about our habits. It's mobile, to some extent it's healthcare, it's the Googles, it's the Alibabas and Amazons of the world. And if they understand our behavior at a much deeper level than the insurance sector, the traditional insurance sector does, because they have much more high velocity information around what we do in our daily lives, what are the implications of that for the sector as a whole? And I guess this sort of ties back to the question of, perhaps the carriers are still there, but perhaps the value is being redistributed a little bit. So I love the fact that you challenged Wilf. Maybe Benoit, I'll ask you to jump in and sort of share your perspectives, and then we'll have a free-for-all.
I think in the end, we can discuss technology or competition. The very question is, what do the clients expect? And it happens that maybe unlike others on the panel, we do not only do life, we also do health, commercial line, personal life, and we do that throughout the world. And the thing that struck me is actually the trends of the clients, the expectations are mostly the same across the world. And indeed, the days where the fact that you were a so-called risk carrier, i.e., I'm bringing capital, and with that capital, I'm insuring you against a risk, these days where it was enough are gone. It does not mean that it's easy to enter the market, because it's not that easy to raise capital, especially those days, and especially given the profitability challenge that this industry is facing. However, our clients are not thankful anymore to say, you insure me. They say, that's the least I'm expecting from you. Yeah. So I would say that each on this panel, or everyone in the industry, is trying to find a way to answer what our clients are saying. And what our clients are saying is, financial compensation is a given. I gave you money, you pay me back when you need me, that's the least I'm expecting from you.
Yeah.
But actually I'm expecting much more from you. And prevention is a part of the discussion, but actually it goes much beyond. It's around having a personalized view of the client, and where indeed some other industries have a better view than we have. It's around being capable of providing an ecosystem of solutions. As I said, I'm in charge of 30 countries across the world, and mostly in emerging markets. Clients today are expecting servicing. They are not expecting financial compensation. And I would say this is sometimes where, and I'm not saying that at all in a negative way, but this is sometimes when people focus only on the transaction part of the experience, they are missing the biggest part. Yeah. The people want a servicing, either for a positive or a bad event. The challenge is that depending on the industry, whether it's life or health or personal life, is going to require different kind of innovation, different kind of technology. But this is where at AXA, We say, now we want to get away from only being a payer and becoming a real partner to our clients. And the key change is, what are the kind of services that we can offer to our client that makes a real difference? Let me give you examples. If I say telematics, Aviva does it, Prudential does it, I'm sure Singapore Life would do it the day they expand from life to go to motor. If I say we do a health platform where you can have lots of advice, tracking, etc., lots of are doing it. But there are also new ways now of exploring. For instance, we believe a lot in parametric insurance. Okay, so parametric insurance, we say there is one parameter out there that no one can challenge, that is factual, and if it's a given, then we can pay the claim instantly. We do that in India, which is close from here. We do that in Chile. In Chile, until last year, when you wanted to insure a forest, it would take, on an average in the industry, 1 year to identify the claim and pay the claim. Now, with what we do, with parametric insurance and NASA pictures, we pay a claim in a few days. And this is, I think, what the clients are expecting from us now. They don't want the old traditional insurance way being done in a modern technological way. Yeah. They want us to totally revisit the experience, be there where it matters, and service them.
Thank you. Chris?
Yeah, this is probably one of my favorite questions, Murli, in terms of whether we should work with digital giants.
Yeah.
And a lot of people ask me the question, why would you invite the lion into the den, or whatever the phrase is, by partnering with Tencent? And it was a simple realization that it doesn't matter, what line of insurance, even if you do savings, when it's insurance savings, i.e. pensions or that type of product, you just don't get the daily engagement that other digital ecosystems like Tencent or Amazon get. Very, very frequent, high engagement, activity. And if you think about just WeChat Pay, the amount of volume that runs through WeChat Pay, or Alipay, or just what happened yesterday on 11/11, that engagement gives you the luxury of not just behavioral insight, but it gives you access. And the challenge that we've all got is how do you get people even to think about what we do? Because people, last time I checked, generally don't wake up in the morning, go take a shower and go, oh yeah, I get to sit down and buy life insurance now. It's not normal customer behavior. So finding the right moment where you can offer up the most relevant solution in the easiest possible way is very difficult to do on our own as an industry, right? Traditionally, we've relied on agents and brokers and banks to find those moments for us. I think as we look forward and as more and more activity gets online or on mobile, then we have to find a way to be there at the right time and then minimize the pain of actually offering something really relevant and of great value for our customers.
So, Wilf, I want to pick up on what Chris said a moment ago. So imagine a world where you're neck deep in partnership with Alibaba and they have a much deeper understanding of the customers. How do you then connect that data and that intelligence that they have to the insurance context? Certainly part of it is what Chris alluded to around, effectively, if I may put my own words, cross-sell, upsell, understanding customer needs. What other forms of intelligence could we bring to the party in a sector that is generally low touch relative to many other aspects of our daily lives as a consumer?
Yeah, I think it comes back to your comment about the frequency of touch.
Yeah.
Historically, there wasn't much touch between buying or selling and claiming. Now, particularly as we're focusing so much more effort on helping our customers to live well, we're having many, many more touch points. If they've got apps, if they've got the devices, if we're involved in their treatment, in their prevention of illnesses, then we have many, many interactions with them. And that gives multiple opportunities to connect. Also, through our CRM system, we're now able to do very, very sophisticated mailings or marketings, digital marketings to our customers at the right time in their life. That's triggering many, many more conversations with our financial consultants. And we're also finding that by working with other digital players, we're able to start new conversations, bring in new customers. So, for example, recently here in Singapore, we teamed up with Direct Asia, who's a large online motor and travel insurer. They get tens of thousands of hits every day to their website, which we wouldn't as a life insurer. But through working together, we've been able to divert many of their digital savvy customers through to our website, where they can buy our products, because we think everyone should have the choice. But also through that, we're able to stimulate conversation that will lead to many of them deciding they'd rather talk to a financial advisor and have some face-to-face advice.
Thank you. Walter, you run clearly sort of the youngest firm at this table. If tomorrow Alibaba were to come knocking on your door and ask to partner with you, would you want to partner with them? What would you hope to accomplish through that partnership that you're not already on the way to accomplishing on your own on a de novo basis?
It's a good question. I think there is, if you're looking at the big ecosystems, you all say, oh, wouldn't it be great to be on Alibaba's platform, on Tencent, and sell stuff through WeChat, and there's so many opportunities out there. But my view is that most of the Tencents, WeChats, Alibabas of the world are going to have a better financial interest in distributing products rather than manufacturing products.
Yep.
There are enough insurance carriers who would fall over themselves to partner with these big distribution networks. And so my view is that the issue is less around how do we partner up and kind of share in the manufacturing stuff, but how do we partner up in a distribution manufacturer way. And I think the key to success there as a life insurance or an insurance carrier is that in the future, it is going to be the most efficient life insurance or insurance carriers that will succeed, who can deliver products and service at fractional cost, who can then implement at a very, very low cost products and services into these gigantic ecosystems such that they can differentiate themselves. Singapore Life is spending all of its time and energy taking the efficiency of technology and turning it into better value for our customers. And if Alibaba or Ali would to come to us and say, come and partner with us, we'd say we'd love to, because we believe that we can provide products and services on a platform like that at a lower infrastructural cost than anybody else.
Chris?
Here's why that doesn't actually work. Because, and you see it in China today, the Alibabas and Tencents of the world are charging 40% commission for a sale. And let's before we get into life insurance, just something as simple as car insurance. You collect $100 in premium, 40% goes to commission. Let's say 40-50% loss ratio, you just got screwed. And that economics doesn't work. So the partnership model, though, allows a way of sharing value such that distribution cost is not the only thing on your partner's minds. And that's the model we're trying. The other challenge of distribution is they won't share information with you. You won't actually get customer data. And you are absolutely victim to how they want to give you stuff. So again, there's many different ways to skin the cat. Just maybe one small illustration. So in Hong Kong, we're working with Tencent Music right now. And there's a couple of marketing things we're doing. One is we're doing a video karaoke competition, and the winner gets insurance from us. The other one is, that's I think going to be really interesting, is would people, because Tencent Music has a VIP service, if you use Tencent Music more, and therefore you get more coverage from your insurance company, would that be a good thing? So these are sort of non-traditional ideas that we're going to test, and you can only do that through partnership.
So I want to pick up on this theme of partnership and direct a question to you, Benoit, and you, Wilf, as well. Is, in the US, if you wind the clock back to about 40, 50 years ago, Walmart started sort of really becoming scale in their business. And just like you see Starbucks at practically every block in much of the universe today, you had a Walmart within every 10 square mile radius just about in the States. And over time, while they were never manufacturers, they took such enormous, powerful grip over the value chain that they were able to mold the manufacturers the way they wanted and to squeeze margins out of even giants such as Procter & Gamble. So I'm wondering whether in the insurance ecosystem, while skirting the issue of whether the Alibabas of the world ever want to take on the capital risk and such, would there be a world where they say, we understand customers better than you insurance companies can from a risk standpoint, and we want to come in as intermediaries, and we really do want to get to that 40% commission, because we know how to create positive risk selection for you? And is that a problematic, or is that a challenging set of circumstances for the carriers as we know them today? Maybe Wilf, to you first, and then Benoit, and certainly welcome Walter and Chris.
Okay, thanks, Murli. This was the idea that we had maybe several years ago, that this might start to happen. And we decided that there are many things we can do as established insurance players. We can do through the right level of investment that we've been making in artificial intelligence, in chatbots, etc., in getting deep insights into customers and staying close to them. We decided we can do all the things that these other customer-centric organizations and tech-savvy organizations can do. It's required a massive shift on our part, but then we've been able to overlay that with some of the things that only an insurance company can do, and some of the incumbent advantages, such as brand, such as scale, etc. But it's so our experience has been that yes, we've needed to shift ourselves, and we've made some big investments in order to do it. And I'll give a couple of examples, if I may. The chatbots, our thousands of agents, they used to call centers to ask for information about their customers' policy, renewal dates, surrender value, etc. Most of those are routine questions. That work's all being done now by chatbots. So we get our people in the call center, there's still some of them, and they focus on the questions that are really not routine, that the chatbot can't answer. So the work's more interesting for them. But as a result of this, our financial consultants get a faster service. It's 24/7. It's more immediate. It's more accurate. Their customers, as a result, get a much better experience. And of course, there's significant efficiency for us. As a result, then of course the premiums come down. Insurance becomes more affordable for more people, which is good for everybody. And another example was in claims. The most important moment of truth that we have. Well, what would the tech companies do? Well, they would use artificial intelligence to make instant decisions on claims with the right kind of investment in technology that we've been making. Well, we've not got it down to instantly, but we've got claim payment processing time now down from several weeks in the past to now just 1 hour. So in summary, our view is, we can do all the things the tech companies can do with the right investments, becoming more customer-centric, becoming more innovative, more tech-savvy, and we can do the things that they're really not able to do.
So maybe to your question, I think first, we all have learned that we have to be humble. The truth is, all the names that you have cited, or many people in this room, or people next to me, if they have the right idea with the right angle and the go-to-market strategy, can come and intermediate or disintermediate existing relationship. And I would say AXA is not as old as Aviva. 30 years ago, no one thought that a small French mutual company would become one of the global leaders. So there is always behind you a new comer in town who wants to take its share of the pie. So we have to remain humble and try to permanently ask ourselves, am I satisfying the needs of the customer? I'm coming back to this because in the end, this is what matters. And what is it that I can offer to the clients that does not exist today, or a need that tomorrow could be fulfilled? So let me give you two very simple examples. One is going to be tech-driven, even if I'm not as a tech expert as you are. In Singapore, last year, we launched a API-first cloud-based platform saying insurance as a service, which now we have rolled out throughout the world as AXA affiliates. And basically, we're offering to anyone in any industry the opportunity to have a self-serviced digital platform to sell insurance on it. So today in Singapore, we partner with the low-cost subsidiary of Singapore Airlines, and anyone who would like in its customer journey to put insurance solution at some point can do it. We offer this. It's fully ready to use with all the API solution, etc. So when you do that, you are just telling the market, we are ready to partner who anyone wants to partner with us. We are technology agnostic, and you keep your customer base, you keep the customer journey, and we're just here to help. We believe this is something that was not even conceivable maybe 5 years ago, and we believe tomorrow it will become a BAU solution. So one example around coming up with a new idea based on technology and not only. And the second one, which actually is dear to my heart because I think it's again back to what insurance is all about. Not far from here in KL, we have partnered with merchant trade to insure migrant workers. So migrant workers, especially in Asia, but not only, is a reality. And all these population are totally not insured.
Yeah.
Because they believe that they cannot afford it, because they don't see the merit of having insurance. With merchant trade, with very simple technological solution, very easy to buy, in a couple of months, we have sold 13,000 insurance policies, and we're happy of that, have had our first claims. And the first reaction of the people was to say, oh, I have a claim, so you pay? And they saw the difference it was making in their life and all the services around it. And I think that, on one hand, having the technological innovation mindset, on the other hand, keep on asking ourselves, beyond the usual word of under-penetration, what are the needs of the people that we don't satisfy today? If you have the two, you have a very good recipe. And then, on top of this, the key is the dialogue with the regulators. Today, the key question, and this is why this FinTech Festival with the MAS is a great opportunity, what we welcome is the opportunity to discuss with supervisors and regulators and try to define together the ways under which we can innovate and bring these solutions. And what we see worldwide is that you don't have a similar kind of regulation. And here there is a competition between Asia, between Europe, between the US, between Latin America, between Africa. And let's face it, the continent or the countries which will be capable of designing the most innovation-friendly regulation will win.
So maybe just to take this home a little bit more specifically to you, Walter, and you, Chris. The sector today, the insurance sector broadly on a global basis, in a good year, the carriers make a 10% return on equity. And that's a pretty good year. The intermediaries, whether the brokers and such, are much closer to 20% return on equity because they don't obviously have the cost of capital that you alluded to, Wilf. So do you see that dynamic changing in the next 10 years, or do you not? And should we just lay that issue to rest, or is that a hanging chad that we should be aware of as a potential risk in the sector for redistribution of the economics? Maybe start with you, Chris, and then Walter.
I would say that to start, the word digital is a big word, and it could have very many different definitions depending on what you're referring to. So as a starting point, I think people tend to jump to the digital sales side, where there's a huge amount of opportunity on the digitization of operations end. And actually that's where a huge amount of margin can be created. It is things like customers don't really want to call up and wait for to talk to somebody. I know the last time you guys called a telephone call center for your bank is generally not a pleasant experience. So people want to do as much as they want to do 24/7, any device of their choice for those simple, easy things. And then you want to give them as instant an access as possible for the bigger, hairy problems, right? And that's when they need the advice, that's when they need the support. And it may be at the time of claim, it may be at the time you need to change something on your policy or along those lines. But if you don't digitize the end-to-end of the business, then actually, you might drive a little bit of incremental pickup on your front end, but your margins don't actually enhance. And I think then you're at risk of being an inefficient business. I think going forward, it's all about not just scale, but it's about efficiency and driving towards as low cost a model as possible.
Yeah, I think you're right, Chris. I mean, we're very fortunate in that our infrastructure that we built had efficiency at its core. We didn't have the downfall of large legacy systems, and we could build from scratch to make sure that we had efficiency all the way through. And the example is, we acquired the Zurich Life portfolio earlier this year, and having onboarded those customers onto the Singapore Life platforms, those customers now have all of that digital efficiency available to them. They can change their policies online and do all that self-servicey stuff that they would have ordinarily have had to talk to someone to do. They can now do all these things themselves. The issue on returns is much less important. That how do we make sure that constantly at the top of our mind we are thinking about how do we drive better products and services to our customers? How do we give them a better experience? How do we make that experience as efficient and as personalized to what they need as what they can? And we take this whole idea of which is the most profitable distribution mechanism, we take that out of it completely, because my view is that if you just build a good product, it will sell well because it's a good product. You're spending your time and effort on building something which people hold as valuable, people see value in having it, and the distribution was going to slowly start to take care of itself, because if you're building something that is good and admirable and that you trust and that is giving good value to people, people will tell their friends through social, they'll tell their networks, their families, and everything will work efficiently on top of that. And we have to believe that being true to that will generate distribution capabilities for us in the future.
Thank you. I want to pivot a little bit to a question that I see from the audience here around complexity and frustration for consumers in our sector, and connect that to this theme of, and let's stick with life insurance for a moment, is the market share of this of life insurance product offerings is only growing commensurate to GDP in the developing world. And for most part, I think many of us might say it's not nearly as widespread given the safety and the security that it provides for entrepreneurs and many others to take risk in different aspects of their lives. How do we expand the reach of that safety net in a way that goes beyond just a simple correlation to GDP growth? Where do you see the most critical opportunities and potential?
Okay, well, many of our markets in Asia are characterized, we call them insurance, they're essentially savings markets. In so many places around Asia, people don't have enough protection. There's a huge protection gap. As people living longer, the protection needs, the expectations, the lifestyles that need protection, preserving in the event of something terrible happening, they're getting bigger and bigger. So we see that being a particular shift that's happening, whether it's through medical or pure term or critical illness. What's really necessary now is people are moving away from the traditional three-stage life of study, work, retire. People having more flexible lives, working in a multi-stage capacity now. And I think what's really important for the protection products now, and also the saving products to develop, to allow people to customize their products, modularize, to keep pace with their much more flexible lifestyles. But I think this, particularly on the protection side, is where we see this happening. The other side as well that's on savings that's really taking off is so many of our markets are aging incredibly rapidly. People are aware that if they want to maintain their lifestyles beyond working, they're going to need to save. And so we see the whole accumulation, saving for retirement is another big area. And of course, with people living longer, it means they remain customers for longer. And there we're seeing significant increase in some of the markets.
So maybe connected to that, another question that I see up here from the audience is, if you were an entrepreneur and you were looking to innovate in some aspect of the insurance value chain, where would you focus? And maybe like a quick 10, 20 second soundbite from each of you in any order. Maybe Walter, you want to go
I am
first?
an entrepreneur.
Yes.
And if I was to look at the insurance value chain, I would build a company and call it Singapore Life, and deliver phenomenal products and services to customers which are easy to access, meet good needs, and something that you're proud to own and tell your friends about.
So I think what I've learned is that one of the key successes to being an entrepreneur is to master the art of marketing. And please do line up here after the session because you'll get some wonderful pointers from Walter. Well done. Anyone else? Thank you.
Yeah, I'd say shifting away from marketing, but towards the customer. And I think that's where the big opportunity is for those insurance companies that not doing it the traditional way is pushing something to the market, but rather starting with deep understanding, insight into customer, their behavior, their expectation, and building the journeys around what customers want rather than what we would like them to want.
Please, Benoit.
If I were an entrepreneur, which I am not yet, I would go beyond insurance. I would say the mistake would be to look at the existing insurance industry and to look at what can I do differently or better. I think the real challenge, and in a way or another, every one of us is working on this, is what is the new business model of the insurance? What is the new offer? And we all know that it cannot be only an insurance solution as such. Again, all the points, all the questions that you have raised during the panel. Yeah. It's around what is the new business model? What are the services that we are not providing to the people today that they are desperately looking for? My view is either it will be the incumbent industry or new entrants, but those who will capture that, it can be on life, it can be on health. I think these are the two areas where it's going to be most relevant, will be the ahead of the game in the coming years.
So I know we're practically out of time, and by the time I finish this sentence, we will be. So I'm going to ask you, each of you, 10 seconds to 20 seconds. Imagine 7 years from now, we're all here on this stage. We're reflecting back on how amazing the past 7 years have been for the sector as a whole. Where would you see the biggest innovation? Starting with you, Chris.
Our biggest innovation?
The sector.
Oh, the sector. I think the biggest innovation that somebody will figure out is how to make sense of a huge amount of unstructured data that will give brilliant insight into customer behavior and customer needs. And frankly, for me, if I were an entrepreneur, that's where I would focus. And it applies to all industries, but certainly for the insurance industry, we basically manage our business with moments in time information right now, which is so far from being optimal.
Thank you. Benoit?
In 2025, I think the whole scape worldwide of the health industry, health insurance notably, will be totally changed. Across the globe, there is not one country where people cannot accept anymore not to have access to health protection of quality, affordable, etc. You can see that in mainland China, you can see that in other countries. Yeah. For me, that will be the biggest innovation, and this is where the amounts are just massive and the expectations high.
Thank you. Walter?
I think that the lines of differentiation between the different verticals in the financial services industry are blurring. It's a bit grey now is between what constitutes an insurance company for savings, what's an asset management firm, what's a bank account, what's a payments, remittances, all of these ecosystems are kind of blurring a little bit. Yeah. So if I'm looking forward 5-10 years time, I see that there are opportunities for institutions to capture a much broader segment of a customer's need set across these currently disparate and separately regulated universes.
Thank you. Wilf?
Yeah, in a few years' time, the life insurance companies that are thriving will be those that have embedded themselves in ecosystems, some of which they will control, and much of this, we believe, will be focused on away from the traditional model of simply protecting people, but really helping people to live their lives better, and especially in a more healthy way.
Brilliant. Ladies and gentlemen, please join me in giving hearty applause to our panelists for their thoughtful commentary.
Thank you.